Next, U.S. fiscal package analysis. http://nTV4x.com News ID C1EB4187 2021 03:27 p.m. U.S. Congress should hurry. The inability of the U.S. Congress to agree on a new fiscal package is weighing on market sentiment. This is understandable, as without a follow-up program to the increased unemployment benefits that expired at the end of July, many U.S. households would face an abrupt drop in income of $600 per week. This would affect roughly 2.6 million unemployed people. For June, the Bureau of Economic Analysis, the responsible state statistics office, estimated that the increased unemployment benefits contributed 4.6% to overall economic income, which would now suddenly be missing. Whether this in the event of non-renewal would also correspond to a loss of overall economic demand is a matter of dispute. As the expired scheme was probably so generous that some of the unemployed had no incentive to return to work. Reduced support from unemployment benefits should therefore lead to stronger employment growth than if the existing program were to continue. Thus, there are two opposing effects should the increased unemployment benefits expire without a follow-up program. On one hand, the incomes of the unemployed; on the other hand, a higher incentive to return to employment. Taking these factors into account, the Congressional Budget Office (CBO), the U.S. agency to support the budget process, estimates that a continuation of the increased unemployment benefit would generate stronger economic growth in the second half of the year than if the program were to expire without replacement. For the year 2021, it would be the opposite. In fact, it is very difficult to assess the impact of these factors, especially as unemployment benefits vary from state to state. Given the current political debates, the possibility of the increased unemployment benefit expiring without replacement can be virtually ruled out, as nobody wants that. The question is the extent of future support and whether it meets the specific requirements of the situation. What is clear is that the current crisis also calls for specific answers for the labor market. In addition to regional aspects, it must be taken into account that the economic sectors are affected differently by the crisis. We estimate that more than 40% of those receiving unemployment benefits are former self-employed and freelancers. Here it is not possible to assess the extent to which a return to business is possible. Of the remaining recipients of increased benefits, we estimate more than half come from the sectors that have suffered the most from the pandemic: trade, health, and education, leisure. Here, a return to employment should not depend on the level of unemployment benefits. Nor should it be forgotten that the medium-term effects of a wrong decision concerning the next fiscal program could be massive. If incomes fall abruptly, the unemployed will no longer be able to service their loans and thus lose their house or car, which will make it more difficult to return to employment later. So, a lot depends on the design of the new fiscal package, all the more so as recent weekly indicators point to a slowdown in the economic recovery in the U.S. as a result of rising contagion figures. In our view, a temporary continuation of the previous program would be the surest weapon to ensure a continued economic recovery. In any case, much depends on the decision in the U.S. Congress, and one can only hope that it will be taken soon. NBSP Download the full week ahead. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.